Good morning, ladies and gentlemen. This is Clueless 8, and this is a pre-market AM report on a extremely pivotal and critical day for the financial markets, and that is the Fed meeting and the subsequent rate hike or no rate hike that we're going to find out around 2 p.m. This afternoon. Let me give you a couple of quick technicals. Before I go into the technicals, just a couple of points to keep in mind. We have had a monster institutional short squeeze in the form of a massive move in the markets that kicked off on Monday and that culminated, or on yesterday afternoon at the highs. One of the pieces that I had talked about extensively, as well as tweeted a few times, is the extremely large number of short positions that were put in place in the form of S&P puts, in the form of buying the UVXY, you name it, not only by institutional traders, but also retail investors. So when you have a crowded room where everyone's on one side of the trade or skewed to one side of the trade, it is almost imperative that the algos and the high frequency trading programs do whatever is necessary, and this is purely a technical move, to go ahead and decimate the shorts. And that is something that we saw play out over the last 48 hours or 72 hours. Okay. Now, in the meantime, despite having some small hedges on the short side, we've been able to get some fantastic gains in the likes of Priceline, Netflix, Apple, Amazon, and a slew of other swing plays that I put in place since last week. Keep in mind that the market is in a extremely critical inflection point. And regardless of whether the Fed raises or not raises, for the average trader out there, or the professional trader for that matter, it's a very, very tricky market to navigate. For that reason alone, it is very important that every member of the Clueless 8 trading service and free trial subscribers go ahead and review all my videocasts, review all the commentaries, and Periscope broadcasts that I do on my private Twitter real-time feed, to get a sense of where the technicals lie, because like I said, this is a pure technical market, and it will completely puzzle, confuse, and decimate traders if they're not aware of what's around them. And what's around them is the S&P 500, the Russell 2000, the NASDAQ 100, and those indices which determine the fate of what the markets are going to do on an intraday or intra-week basis. So saying all that, stay light, and in my opinion, the market is pretty severely overbought on many metrics at this point. And I'm going to show you here the 4-hour chart, which is the next thing to a daily, and this is what what you'll see. So what we have here in the E-minis is a live representation of what's happening right now. E-minis are down about 7 points. We added to a few more of the underwater UVXY, as well as the SPX shorts as a tactical play going into the Fed meeting. Now, at this point, we have the 34 and the 50-day moving averages moving here. You can see that. So a logical move would be a retrace down towards testing the mid-Bollinger, that's this gray line, at around 1964. That translates into about 1970 on the S&P 500, or the slightly rising 34 and the 50, and that's right there. They're merged together, as you can see. If this is an ascending triangle, which is a bullish pattern, right there, the blue line and then this yellow line here, then you are going to, this is what I'm talking about. If this is an ascending triangle, okay, then the logical move would be to come down, test the 1955, 1945 level down here, and then make a bounce from here towards crossing over the 200-day moving average on the 4-hour. I also have a downtrend line. You can see that, right? So those downtrend lines, around here, to break out of the downtrend line and complete this pattern that ends at around 2022. Okay. Now that's a significant move. And will the market play out exactly as we show it? I have no idea because we don't control the algos and because of other global factors involved. If you notice that the global markets have been biasing towards the upside over the last couple of days, one of my theories is that the central banks have been alerted to what our Fed is going to do. Again, that's just my theory, and they are they're reasonably excited about what they see. So do not be surprised that we don't even get to these levels. And let me show this. We basically just pull back a little bit. We pull back a little bit, and then from here, we make a sharp move up, going into Friday, going into next week. We'll see which scenario plays out. Now, this one of the other things to keep in mind, which is simply looking at it from overbought, from relieving overbought oversold conditions, is looking at the stochastics. So this was yesterday, all buying, right? All short squeezes, short covering. So here we are. This is a 4-hour chart, so this so it carries a little more weighting than the 30-minute or the 60-minute for swing traders. And if you look at the 4-hour, you can clearly see that once you get to these levels here, overbought conditions, okay, close or around the 100, you always have a technical. We generally tend to have a technical correction down. And then the market does what it needs to do. In other words, it continues with its primary trend, which at this point on the intermediate term is up. Okay, on the short term is up. So a reset would bring us down here below 20. That would be an optimal buying opportunity, just the way it always is, right there. Okay, notice this. And all of this is very clearly explained, detailed with many other hidden messages that are explained about the market in my advanced group coaching sessions. Highly recommend and encourage people to join them. And you can sign up on them on the members area on the website, and click on advanced coaching and then book an appointment. Okay, so as you can clearly see here, this pretty standard procedure. You get overbought, then you pull back, right? So we got overbought, and now we're in this pullback phase. Okay, so whether or not this is going to happen, we don't know, but we have to keep this in mind. A lot of head fakes along the way. We all know that. The markets never make it easy, and so you have to be, you have to be cognizant of that. Now let's look at an hourly chart. On the hourly, what we can see on this ascending triangle is a slightly different story. The fact that we pull back from yesterday's close of 1989 on the S&Ps, that translated into 1995 yesterday afternoon at 4 o'clock. The fact that we pulled back in between this Darvas box down here has already reset for the hourly chart, already reset the stochastics, right? The other thing to keep in mind that the McClellan oscillator is quite overbought. At 414, that's an overbought condition, okay? And that's something, has to be taken into account. Now, that's this number here. And I'm going to show you a visual representation of that as I pull up the McClellan. You can see what happened. Okay, since the 1935-1940 double bottom level, that's a double bottom. Look what the McClellan was down here at minus 284. Okay, we got pretty deeply oversold, and since then we made a sharp move up. So regardless of what quotes and what prices you see on the screen, you have to give a lot of weighting to the internals because they tell the real story. They don't always work out at our time, but they do work out. There's no question about it. So McClellan right now is at 414. If we go back a little bit, let's say the daily, you can see here the same story. The McClellan's at 149. The last time the McClellan was at 164, and here it closed at around 150, was right here. Was right here, close to the top. Top meaning close to the 21, 22 level. So these are danger signs, okay? You got to keep in mind here. And at the lows here during the crash, the McClellan got to minus 343. Prime buying opportunity, which we certainly did and benefited from tremendously. All right. So this is the daily chart. So on the daily too, if you and focus on this, we are quite overbought here. And the reset in a strong market would mean that we simply come down, test the 80 level, or if you want to be a little bit more of a technical geek, you can always draw an uptrend line like this, just like a stock, and say that, okay, the McClellan's going to basically come down towards 60. I'm sorry, the stochastics are going to pull back here, and then it holds the uptrend and moves from here back into overbought condition. Whichever the case, this is the scenario that I'm looking at on the, which would be a great entry point in my opinion, unless we break below this triangle, in which case this particular formation becomes a bear flag, okay? This particular formation below 1950 on the E-minis, or let's say below 1940 becomes a bear flag, this thing. And a bear flag, as we know very well from all my coaching sessions and people who follow technicals, means that we're going to break down. And that breakdown, the first level of support around 1900, and the next level of support is, of course, the major support, and that's the flash crash of August 24th. So what plays out, we don't know. There's the optimal scenario for people bullish biased is that we pull back towards the 1947, 1950 level, hold the uptrend line, and make a move from here to engaging the downward sloping 34 and the 50-day moving average. That scenario is very, very possible. Now, in a market which is run by machines, and we don't know how many shorts are still out there, institutional shorts, we could very well today not even do this. We could break out of here and then engage the 34 and the 50 right on a Fed announcement. Just letting you know. Once we hit the 50, there should be selling. No question, I shouldn't say no question about it, but that is a strong possibility. Keep in mind, this was a dramatic fall. So at this point, whether this is a bear flag or it's going to complete this pattern and take back everything that we lost, $14-15 trillion worth of market capitalization that was wiped out over a matter of 1, 2, 3, 4 days, might be recovered. I've seen it happen, so be aware of it. All right. So trying to be dogmatically short is not a good strategy at this point either. Tactical shorts, yes. So whether or not this whole pattern gets reversed, and then we get up towards that 2100 level, 2100 plus, remains to be seen. But so far, futures are down 6. We'll see. That's it for now. Those are all the scenarios. Follow every single trade alert, Twitter post, and Periscope broadcast that I put out there. Sign up for the group coaching sessions, and good luck to all.